Hi, thank you for joining us today. It is 1 p.m. here, so we're going to go ahead and get started. I am the marketing coordinator for Extra Help. My name is Erin Kopek. Thank you for joining us today. We're going to learn a little bit about commercial insurance with Natasha Stearns, and she will begin speaking with us momentarily. The call will last typically about an hour. You are set up as listen-only mode, but feel free to ask questions at the question box at the bottom, and we can definitely read those off at the end. So let's get started. Today, Natasha Stearns with Country Financial will be telling us a little bit about 5 things that we need to know about our commercial insurance. Natasha has been with Country since July 4th, 2011. She holds a master's degree in education psychology and a bachelor's degree in psychology, both from Southern Illinois Carbondale. She is also currently working on her financial security specialist designation from the American College and is an active member in the National Association of Insurance Financial Advisors. Let's go ahead and get started. So I'm going to turn it over to Natasha.
Hello, how is everyone doing today? I hope well. I hope lunch went well for everyone. I'm going to get started here in just a minute as soon as this slide comes up. There we go. Today we're going to talk a little bit about commercial insurance and how to properly protect your business. We're going to go over some different stats and some reasons that it's really important to pay attention to commercial policies. Your average commercial policy is approximately 40 pages and can be much longer depending on the type of business that you have. So it gets kind of tedious at times to go through those policies and look at everything that you have and really to know what you should have. So what we're going to do today is we're going to talk a little bit more about the highlights of those policies and what is really important and what you need to make sure is covered. Because about 75 to 90% of small businesses overall are underinsured. Okay, just a little fun fact here too. The BOP, or Business Owner's Policy, was introduced first in 1976, and it was the first commercial package that offered property and liability coverage in the same policy. So before that, you had to have, and you will see this sometimes with different companies, but that you'll have to have a different liability policy and then another separate property policy. But with our company, we combine those into one. It makes it a little bit easier, a little bit less paperwork, a little bit less policy fees. So that's something that's a little interesting. And why is it important to know your commercial coverages? It's actually one of the most crucial investment decisions that a business owner has to make. The right coverage can be a difference between going under in a lawsuit, losing your business. It's very important to small business owners because of the often close relationship between business and personal assets as well. Depending how your company is laid out, it could really affect you personally if you didn't have the correct coverages. Talk a little bit about the different types of policies. Not all policies are created equally. Many packages include different levels of inclusions and endorsements. Company to company, that's going to vary. For example, we have like what's called the gold package and the silver package and the platinum package, and it just really depends on what all you want included into your policies and what all you want covered. There's what's called a BOP policy, which is a business owner's policy, a CPP, a commercial package policy, and a liability-only policies, and an AU is typically referred to as an umbrella policy. We'll get a little bit more into those here in just a little bit as well. And there's different types of classifications when it comes to the commercial insurance and how your business is legally lined out. Sole proprietors and partnerships, they're personally liable for any debts or legal judgments that your business owes. So in the case of a lawsuit, it's not limited to the income you make from the business alone. So let's say if we had different businesses. So if you had one business that was storage units and then a regular business, both of those could be affected in the event of a lawsuit if you're a sole proprietor or partnership. Also, personal judgments. Let's say you're in a partnership with an individual and that person gets in a car accident and paralyzes somebody or kills someone, God forbid. Those personal judgments could come back on the business. LLCs and corporations are a little bit different. Business assets are only used to pay off your legal liabilities. So therefore, the owners mostly stand to lose those investments that they put into the LLCs or corporations. However, it's very important to have adequate personal liability limits in place to protect your personal assets as business owners. On your auto policies, on your home policies, you'll see what's called a liability limit, and we're going to talk more about that within the business here in just a minute. But you also need to make sure that those personal liability limits are set correctly in both of these situations so it doesn't affect your business. Talking about liability coverage, it's our next slide. Commercial liability coverage. Basically what that does is it protects you against damaging lawsuits filed by clients or individuals who maybe come into your store or who you deal with on a day-to-day basis. Employment liability coverage protects the business against claims filed by the employees regarding such things as sexual harassment or things of that nature. Now, what's really one of the most important things to do, and it's actually one of the cheapest coverages to buy, but it often gets overlooked because individuals don't understand how to properly set their liability limits. I do what's called a magic number. I like to find the magic number, whether it's a personal client, whether it's a business, whoever I'm dealing with. I like to find out their magic number before we set any of their liability limits. It's very important because those are the only things, that liability limit is the only thing that's going to protect you in a lawsuit. So basically, the general rule is to protect your assets. You need to set your liability limits at your net worth or 3 times your annual profit, whichever's highest. So basically you would take the value of your business plus the property owned, for example, your buildings, your equipment, your merchandise, etc. You would subtract your debts owed, and that would be the liability coverage that you need to at least be to that number, or 3 times your annual profit, whichever's highest. As you can see on the right-hand side here, we got an example. If the market value of the business was $500,000, the buildings was $250,000, the equipment was $50,000, and the debts was $125,000. As you can see, I worked out a little example over here. Your liability limit here would be $675,000 that you would need to set your limit to at least that number to cover yourself. Liability limits generally come in these amounts. The first number is called your general liability limit. The second is called your aggregate. So basically, the first number is per accident. So if there's an accident today in your store, there'd be $300,000 worth of liability coverage there for that accident, with a maximum for the whole year of $600,000. So the example that we saw just in the last slide was $675,000 was the net worth of the business. So I would suggest covering to the $1 million, $2 million policy limit. And basically, the reason for that is because the $500,000 limit is a little bit too low. You're still leaving some of your business assets out there unprotected. it's also, like I said, it's very cheap to buy liability coverage, so I'd always rather my clients have a little bit more than not enough. Now, let's say I occasionally run into businesses who have, they need more than the $2 million. So basically, what we would do is we would add an umbrella. It's an additional policy, and what it does is it's going to put an umbrella under or over any of the businesses. Maybe if the business has autos that they owned, then it would put an umbrella over all of those things, and you can extend another $2 million or $1 million or $3 million on top of this coverage already. So we can always set your limits correctly, but this is generally where a commercial policy cuts off, and then you have to go and add an additional umbrella policy. Medical payments is the next thing here on our agenda. And basically what you'll see on medical payments is you're going to often see these limits too low. I usually see it set at $5,000. And again, it's one of these things that's it's so cheap to buy the coverage. I mean, I'm talking $15 for the year, $20 for the year to buy the appropriate coverage, which I suggest is at least $25,000. And basically what that covers is any individuals hurt on the property owned by the insured. This would also cover, as you see, this is needed, it says at the bottom here, this is needed whether the building is owned or not. So basically, if you were renting a building, it would also be covered for rentals. So if you had, let's say, a storefront and you had a client come in with a little girl and she was swinging on a cabinet that you had in your office and fell and had gashed her head open and needed to go to the hospital, well, the medical bills that would be paid from this policy, even though you weren't at fault. Also, there's no deductible generally on this amount, so that's nice. And basically what would happen is whenever this little girl would go to the hospital, you know, her mom would fill out these reports and say, you know, we were at this cabinet store and she was swinging on one of the cabinets and she fell and the cabinet hit her in the head. Well, when she fills that report out, her health insurance isn't going to deny that claim. So then what's going to happen is they're going to send it to the business, and the business is going to be going to want to show their coverage that they have for medical on their commercial policy, which is why $5,000 is typically not going to be enough to cover much, because it costs a lot of money to go to the hospital these days, as you guys know. Moving on here, next we have personal property coverage. Personal property coverage, first we're going to start with the physical location. If it is owned, the market value versus rebuild cost is often going to be very different, especially nowadays since the real estate market has taken a big crash, and I know that is starting to come back a little bit, but you're still going to see quite a difference a lot of times between how much you bought a building for and how much it's going to cost to replace it. Your agent should have a replacement cost evaluator, and they should be able to evaluate how much that building is by asking you questions, how much that building is going to cost to rebuild. Because nowadays it's expensive to build. You know, your hammers and your nails and your wood and everything costs more each year. So you should also see that rebuild cost increase a little bit each year, and which typically makes your premiums raise just a little bit. Mine subsidence is also something that is an option on the policies. Here in Southern Illinois, it's a pretty popular option. It basically says that if there's any mining in the area and the building falls through or shifts because of being undermined, then that coverage would only be there if you have this endorsement on your policy. So it's important to know whether you're in an area that is affected by mines or being undermined. And earthquake coverage is something that is really important, and I wanted to talk a little bit about deductibles, because earthquake coverage is very different than a regular deductible. Most times you will see a $1,000 deductible or a $2,500 deductible. Well, on earthquake it works quite differently. So let's say you had a $500,000 building, and your earthquake was a 20% deductible. What you see here, generally the deductibles are 15% or 20% in our area. Now, and that's in Southern Illinois. In different areas, based off where you're located in the fault lines, it can be different, but this is 99% of the time, this is what I see in our area. So if you had a $500,000 building, and you were responsible for the deductible of 20%, you would have to cover the first $100,000 of damages to your building before earthquake would kick in. So that's something that often businesses don't realize. I mean, that's the same on personal earthquake coverage on your homes and things like that. So it's not different for business property. It's just how it is in general, and sometimes individuals don't understand that because they're not educated correctly. The next part of personal property coverage is office equipment and merchandise and miscellaneous things or any other property owned by the business. So you're basically going to have two different limits for personal property coverage. If you own the building, there will be one limit for the buildings, or whether it's 1, 2, 3, 4, 5 buildings, you'll have a limit on, you can have a total limit on all the buildings. Like $1 million will cover all 3 of these buildings. Or you could have a specific amount on each of the different buildings. So this building's worth $500,000, but this one's worth $150, and this one's worth $150. You could, and then you'll also have another specific amount just on the personal property coverage, which will include the office equipment, the merchandise, and any miscellaneous things that the owner owns. If you do not have a building, if you do not own the building, there will still be personal property coverage, and that coverage will include these bottom things. It's also really important to look at your policy, because there is going to be a big difference between actual cash value versus replacement costs on your personal property and on your buildings. There are often companies that will write at just actual cash value, which is going to depreciate the building. So let's say if the building was built in the 1940s, it's going to depreciate the building from current year, 2013, all the way back to 1940, and it's going to give you the actual cash value of the building versus the replacement cost on the building. So that's something that you really want to make sure that you ask your insurance provider whenever you are writing a new policy or reviewing your current policy. There are businesses that also have commercial auto policies. And for those businesses, we're going to go over that real quick right now. You'll see this with churches, and they have church vans that they drive, or commercial contractors. They have the trucks that they drive to go and do the services, and really any business that has a delivery service or something like that would have an auto involved. You'll want to make sure that there's an auto policy, commercial auto policy, and not just a personal auto policy, because there is a lot more coverage that would come from a personal, or a commercial auto policy, and it would be correctly covered that way. On a personal auto policy, if the vehicle is being used for business, the insurance company can actually deny the coverage on the business. So you want to make sure it's under a commercial auto policy. And the first thing is bodily injury, and this covers things such as medically related expenses from an accident, such as hospital bills, doctor's visits, therapy, prescription medication, loss of wages and funerals, and things like that. you're going to typically see these bodily injury limits set at 500,000 and 100 and 1 million. It's the same type of liability coverage as you would see whenever I was talking just a little bit ago about you have two numbers. The first number is your general per accident, and the second number would be your aggregate or per year limit. And the bodily injury would also need to be set at the same as your liability limits when we first talked in the beginning about those. Property damage will be the next thing on an auto policy, and this will cover repairs related to any type of property that was damaged by an employee or the owner, if the owner was driving the vehicle. So it could include things like other vehicles, or if someone runs a car into a building, something like that. Or you hit a telephone pole, things like that, all are going to be covered under property damage. This wouldn't actually cover the vehicle that the commercial business owned. It would actually cover the other vehicles and anything else that was hit. The next thing we would talk about is underinsured and uninsured motorists. And it covers the cost associated with an auto accident caused by an underinsured or uninsured motorist up to your policy limits. So it's really important that you keep this set correctly because, you know, some people don't carry insurance and they don't carry it to the correct limits. So this would kick in and it would cover up to the limits that you would choose it to cover. It's usually going to be the same as your bodily injury numbers. It should be set at the same. And just a second ago when we were talking about property coverage, and I was saying this wouldn't cover your own vehicle, but it would cover any other vehicles that you hit or any other buildings or telephone poles or etc. Your vehicle that is owned by the business would be covered under the comprehensive and collision deductibles. Basically, if it's a comprehensive claim, it would be weather, falling objects, or animal claims. So whether you hit a deer or you had a hailstorm, things like that, that will be covered under comprehensive. And you generally are going to see that at a $500 deductible. Collision, that's going to cover the property damage to the owned vehicles when a collision is caused by you or an employee of the company. That generally has a $500 deductible as well. Medical payments here, it's going to be a little bit different than the medical payments we talked about earlier. Medical payments we talked about earlier would cover any clientele that was coming into the store. The medical payments here is actually going to cover anyone in the vehicle that is wrecked. So it's supplement to health insurance that pays for costs that aren't normally covered, such as deductibles, co-payments, dental care, prescription drugs, home nursing care, and funeral costs. So you want to make sure that you set those correctly. And again, $25,000 is what I really like to see on those. And typically I see $1,000 or $5,000, which makes it a little bit difficult to, it doesn't cover much. Additional endorsements that you can have on a commercial policy. We have already talked about the mine subsidence and the earthquake. Sorry about that. We've already talked about the mine subsidence and the earthquake, but there are some other coverages that are really important, and this isn't all of them by any means. It's just a couple that I was going to touch on today. Business interruption insurance, that's going to cover salaries, rent, utilities, and even lost profits if a business is inoperable due to a covered peril. So let's say a tornado comes and takes out your store. Well, not only are you losing your merchandise, your personal property that you have covered previously when we talked under the personal property tab, but you're also losing your profits and operable operable costs. So basically, there's that limit there, and you can choose that, and you can make that different. So it may be on your policy at a set limit, but you may think, man, that wouldn't cover it. If a tornado hit my building and I was out of business for a year, that wouldn't cover anything. So that is a coverage that you can increase on your policy, and you may want to look at doing that. I have had clients in the past that were really interested in increasing that coverage. The next one is a product liability insurance. And basically what this does is it protects the sellers and the manufacturers against defects or injuries as a result of the product that you sold. So basically, whenever you see the recalls for children's toys or baby items, if you sold something like that in your store, this product liability insurance would come in and cover you, so that there wouldn't be a lawsuit back to you due to one of these defects. Errors and omissions is a professional liability insurance, and what it's going to do is it's going to protect you from legal claims of malpractice or failure to perform to professional standards. Many different businesses have errors and omissions policies, and insurance is definitely one that does have these policies. So I'm very familiar with it myself. Basically, if I were to tell clients information that was incorrect, then my errors and omissions license or liability policy would kick in and cover me for that. This accident actually happened just, I believe, in the beginning of May, end of April, and it was actually very shocking accident that happened. You probably would have heard about it on the news. One of the really important reasons that you set your coverages correctly is to prevent things like this happening. This is a case where there was a Texas fertilizer plant that had only $1 million in liability coverage. It ended up causing an explosion that had an estimated $100 million in damages. So there was an earth-shattering explosion that left a 90-foot wide crater and damaged homes, schools, and nursing homes within a 37-block blast. Killed 15 people and injured 200. And they only had $1 million on their liability, which we talked before about how to set that correctly. So one of the lawyers involved said that he expected the plant's owner to ask a judge to divide the $1 million in insurance money among the plaintiffs and then file for bankruptcy. So basically, the owner of that plant would have had to file for bankruptcy just to get out of this. Not something that you want to do for your business. So basically, what you really need to do is make sure your liability limits are set correctly so that something like this doesn't happen. And this is a large-scale accident, but there are many smaller accidents that happen that can affect your business. Insurance and financial reviews. How often should I update my insurance? We suggest that you update your insurance annually. We actually, and different insurance companies are going to be different, but we pride ourselves in meeting with our clients once a year and making sure that things haven't changed. In a year's time, there's usually quite a bit of things that have changed, especially with the business owner. Business owners typically buy new property, they buy new fax machines and new computers and new this and new that, new lawnmowers and new tools. And the last thing they're thinking when they're buying that and busy and out and getting new business is, the last thing they're thinking generally is, oh, I need to update that, mower I had on my other policy was only $3,000. Now this one's $12,000. So it's really important to sit down every year and look at those numbers and make sure they're all correct and make sure all your things are covered correctly. I've sat down with multiple business owners who didn't have hardly any equipment on their policies and were not even aware of it. Your liability limits is something else that can change yearly or every 2 or 3 years. Your business starts to make more money, you're more profitable, you're buying new things, you're paying off things. All of these things will make your liability limits need an update. And your financial statements need to be kept up to date as well so that you can keep a good check on your liability limits. Basically, that's all I have today. Anyone can feel free to contact me at any time with any questions regarding anything that we talked about today. If you'd like a copy of the PowerPoint, you can email me and I will send the one out to you. And my contact information is there if there's anything that anyone would like to ask.
Yeah, there is a question, Natasha.
Okay.
They asked, what if an employee is driving their own car for business purposes?
And there's an additional coverage on your policy on your auto policy is non-owned autos. So you can actually opt out of that. So it's important to check with your insurance agent and to make sure that that is on your policy. It's called non-owned autos. So that's something that's really important because that would extend, if someone is driving their own vehicle, that would extend that liability to them. And it's typically really, really cheap. I want to say $30 or $40 a year just to have that on there. But if someone wasn't aware that they needed it, or if an insurance agent wasn't really on top of it, and it could possibly not be on your policy.
Okay, I do not see that there is any more questions, Natasha. I think you covered everything very well. If you guys have any more questions or feel the need to get in touch with Natasha, you can reach out with myself or Natasha. Her contact information is right on the screen. Thank you very much for presenting today. Please join us next time for our webinar next month on July 18th and look for the invitation in your email. Have a good day, everyone.